Are you struggling holding trades? Are you over-risking? And are you gambling? In this video, I'm going to take you through all of my rules, my personal rules, which allow me to leave runners and not overtrade and not gamble and be safe while I'm trading. After watching this, you should have no problem with taking trades. You should not be scared and you should not be losing money as much as you think you would be. I mean, obviously, if you're unprofitable, you're going to lose, but with the correct risk management, you can always mitigate that. How to actually manage your risk. You should never risk more than 1% a trade. Your head should be detached from dollar gains. The reason I'm saying this is because of the fact that dollar gains don't really matter as a trader. Yes, you could be, obviously we're doing this for money. We are doing this to make money. But when you're a beginner and you're still learning your strategy out and you're still learning, you're still understanding how the market works, you should not be focused on making money. In fact, you should be focused on percentage gains. 10% on a $100 account is $10, but that 10% on a 100K account is $10,000. The percentage matters, not the dollar gain. Focus on dollar gains and not, focus on percentage gains and not dollar gains. I said that the opposite way. You will always expand. You will expand and you will get capital. There's many ways you can get capital. There's prop firms, there's this and that. So don't worry about it. You will make money. For now, focus on percentage gains. The simplest risk management system that I use to this day. Risk 1% of my capital when I enter. When it reaches 2R, partial 50% and break even. When it reaches 2R, let's say you're risking $100 and your trade reaches 2R, you're up $200 and you partial 50% and break even. Essentially, you're taking $100 out, so you're completely risk-free. And if the trade does come back to your entry, you're break even and you've secured $100 and you just don't care anymore. So you basically profited 1% and you are risk-free. After it reaches your full take profits, partial 80%. And then let the rest run. What do I mean by this? Let's say your full TP that you've had in your mind. So for example, let's imagine you're buying before a distribution below a low and you're targeting a high. I'm actually going to draw it. So let's say this is your target and this is where you bought. This is price action. Price comes here. This is your buy. You're buying here. Price jumps up and you get your 2R. So you partial right there. Partial 50% right there. Your target is at, for example, 10R. So your target is up here and it's a 10R. You've partialed 50%. Then you let this run towards your targets. And then you partial 80%. The reason you do this is because you want to secure most of your profit. And then you want to let your trade run in case it wants to pull something like this. So you're keeping your entry from down here and you've already secured a lot of profits and the rest of this is going to run to wherever price wants to go. Now, how to actually be detached from emotions while trading. The simplest solution to this is to have a life. A lot of traders come to me. In fact, one of my students who had a one-on-one session with me told me that he's very stressed when taking trades. He has FOMO, and whenever he loses, that loss eats him up in his head. It depresses him. He's scared. Blah blah blah. I told him, stop trading all day. Dedicate 2 to 3 hours to either studying trading or actually being in charts. 2 to 3 hours maximum for doing anything that is chart related. The rest of the day, you should have a life outside of trading. You should have a life outside of trading. So go to the gym, go talk to a woman, go outside, go have fun, go out with your friends, go for a drink, whatever it may be. Have a life. Play video games. Go outside. Go to the gym. If you're stuck onto charts and you lose a trade, let me actually make this bigger. That loss will eat your head. If you have a life, you'll move on. You'll go outside. You'll play video games and forget about the loss, which then leads to you coming back the next day with a fresh mind. You don't want to be on charts all the time. Trading is not like any other niche where you want to work 24/7. You do not want to work 24/7 when it comes to trading. In fact, you want to work as little as possible. You want to be on charts as little as possible. This way, you're just not going to be scared. Okay? Now, what are some other things that people struggle with? When do I know that I should exit a trade? Let's actually hop onto charts and I'll show you some examples on how I manage some of my trades. Here we are on NASDAQ, and one of the trades that I took this week on NASDAQ was right here. I entered around this level, taking price lower, and I exited right around, I believe, here. Now, what do I look for when I'm in a trade and I'm looking to exit? Okay. Let's assume my entry was here. I don't remember my exact entry. I was only 1 minute and at different levels, but let's say this is the setup that I'm currently looking for. And what made me actually exit right around here. So pay attention to PD arrays that are opposing to you and PD arrays that are supporting you. What does this mean? In this instance, I'm going short. I'm shorting from here, taking price lower. Pay attention to how price reacts to levels that are supposed to support price to go into your direction. For example, here, I have this order block. This whole level acts as an order block. And we also, I'm going to take them with, get this box away. That's the new day opening gap. And we also have this one right here. We have this fair value gap right over here, if I can draw this correctly, which we can see price taps into and respects and continues lower. As long as I'm in a short, and as long as we respect those bearish PD arrays, I'm expecting price to continue lower. In this case, a lot of beginners would be scared to hold their trades when this happens. We get a big move like this, and it's coming back for entry. You would be scared. But the reality is, before deciding to exit, you should see how the candles close. If you just close the trade based on this wick, you would not have plenty rest at a move. But if you waited, you can see price comes all the way up here, tapping into the order block, and then closing inside this FVG to then continue lower. Here we are continuously respecting bearish PD arrays. Now, why did I exit around this level? So I could actually draw this outwards to get the perfect level here. So I exited here. My TP was here, but that's where I exited. Now, why did I exit here and not here when we got an up move? and we can clearly see that we have displaced this inversion or this FUG. S&P and the Nasdaq are correlated, and when price was down here, I noticed that S&P has swept this low, while Nasdaq failed, which is an SMT, and that's a confluence for me to exit my trade. So my point is that you should not be exiting trades, and you should not be doing anything in terms of looking to quit your trade if there is nothing for you to exit off of. For me, there was an SMT here that allowed me to exit my trade, which signaled to me, okay, price is going to reverse now without hitting my full TP, which is why I exited. And yeah, risk management and trade management is very easy. This was just a small guide, but if you genuinely pay attention and follow what I tell you in this video, you should be good. Thanks for watching.